What's up, everybody? Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Okay, happy Wednesday, everybody. With official statements over the last few days, it is now very clear that Beijing is coming down firmly on the Russian side, even with the danger it will do to its relationship with the European Union. We remember that in recent months, Beijing officials were still hopeful to maintain healthy, albeit strained relations with the EU, especially in the areas of investment and trade. With firm support of the Russo-Chinese relationship, this will be more difficult now for Beijing. On Monday, the People's Republic of China Foreign Minister Wang Yi had another phone call with US Secretary of State Blinken. Then soon after, he gave a press conference during which he made the following statement, quote, "The China-Russia relationship is grounded in a clear logic of history and driven by strong internal dynamics, and the friendship between the two peoples is rock solid. There is a bright prospect for cooperation between the two sides. No matter how precarious and challenging the international situation may be, China and Russia will always maintain strategic focus and steadily advance our comprehensive strategic partnership of coordination for a new era." End quote. Beijing is now framing the war in Ukraine as a quote-unquote humanitarian issue, still not using the terms war or invasion to describe the situation, and demanding that, quote, "humanitarian operations abide by the principle of neutrality and impartiality, and to avoid politicizing humanitarian issues." End quote. State media is now framing international pressure to not support Russia as a form of bullying of China, which undermines Chinese sovereignty and to which China must firmly oppose. This is from the state-run Global Times today. Quote, "Cui Heng, an assistant research fellow from the Center for Russian Studies at East China Normal University, told the Global Times on Monday that Wang," here referring to Wang Yi, who we just quoted, "remarks suggest that China will not bow to the West's pressure to sanction Russia. China-Russia ties and the conflict between Russia and Ukraine are different things, and no matter how much the West provokes, the friendship and closeness between the two sides will not be affected. This has also set the tone for China's position in the current Russia-Ukraine conflict." End quote. Unsurprisingly, two anti-American narratives have also become more aggressive in state media, moving from blaming the US for the conflict in Ukraine due to the eastward expansion of NATO to flatly claiming that the US purposefully instigated the invasion for its own ends. This is from a state-run media interview with a national security analyst at the China Institute of Contemporary International Relations in Beijing. Quote, "Supporting Ukraine's neo-Nazis serves the US's own interests. By inciting conflicts between Ukraine and Russia, the US has weakened Russia and further pushed Ukraine to NATO. It has also improved its relations with Europe, which has become more strategically dependent on the United States. The US is really the biggest beneficiary of Russia-Ukraine tensions." End quote. Yesterday, too, the People's Republic of China Foreign Ministry started pushing narratives about US biolabs in Ukraine, with spokesperson Zhao Lijian expressing that, quote, "These biological laboratories store large quantities of dangerous viruses, and Russia has found in the course of military operations that the United States uses those facilities for biological military programs." End quote. By yesterday evening, Beijing time, the search tag "China urges US to release details of biolabs in Ukraine" was the most trending search term on Chinese messaging platform WeChat. Meanwhile, official state narratives have been caught up in sports in the country too. The International Paralympic Committee is seeking answers from China's state broadcaster, CCTV, after an anti-war speech by its head was censored during the Beijing Winter Games opening ceremony over the weekend. Also, ESPN is reporting that Chinese broadcasters will not air Premier League matches this weekend in response to the league's planned support of Ukraine. Yesterday, Tuesday, the Chinese embassy in Ukraine confirmed that all Chinese nationals have been moved out of Ukraine's danger zones. And one more thing while we're on Ukraine and what it means for China. The wholesale prices of gasoline and diesel have both reached a 10-year high this week in the country. This shouldn't be surprising as we're seeing similar trends around the world, as of course this is an international market. Okay, next up, the American Chamber of Commerce in China has published its 2022 China Business Climate Survey report. According to the report, less than one half of the members surveyed in China said that they were optimistic that the Chinese government was committing to opening its market to more foreign investment over the next 3 years, down from 61% a year earlier. This trend of pessimism has been seen across the board. More than 1/3 say that they would reduce investment in the country because of an uncertain policy environment. The Wall Street Journal, writing on the survey, expressed that many survey respondents said that China's travel restrictions related to its zero-tolerance policy towards COVID-19 was a headwind when it came to attracting and retaining talent. This is an issue that we have covered before on China Update. The international labor market is incredibly undersupplied in China currently. According to the American Chamber of Commerce report, more than 75% said qualified job candidates were unable to move to China, up from 37% the previous year. Over 30% said candidates were unwilling to move, up from 18% last year. Meanwhile, in Washington, there seems to be a split between national security officials and economic officials or trade officials on some aspects of US-China policy, a split often observed throughout history and across the globe. US media outlet Politico is reporting, for example, that national security officials, led by National Security Advisor Jake Sullivan, have been advocating for months for President Joe Biden to issue an executive order that would prohibit many American investments in Chinese technology firms and startups, arguing it is needed to ensure US banks aren't helping Chinese firms develop software or devices later used by the People's Liberation Army, the party's military. But, quote, the Treasury and Commerce Departments are pushing back, said two industry officials with knowledge of the talks, arguing that the new rules would dramatically reduce new US business in China and put American firms at a competitive disadvantage to European and Asian banks that will continue to access the world's second largest economy. End quote. And last up, let's continue our ongoing coverage on the months-long housing crisis in China. By the way, if you're enjoying the content, don't forget to hit that like button. It's a huge help for a small channel. And if you're watching for the first time and you're enjoying the content, you're getting some value from it, maybe consider subscribing. We release one of these every day. You'll be up to date with the most recent analysis and news coming out of China. Okay, today we look at Logan Group. At the start of this week, Logan Group's wholly owned subsidiary, Shenzhen Logan Holdings Co. Limited, admitted that March is going to be a very painful and difficult month for the housing developer, as it has 5.3 billion RMB, approximately $839 million US, of domestic borrowings due this month. The Shenzhen-based firm focuses on residential property development. It's not a massive company, but it's not a small one either. According to data compiled by the China Real Estate Information Corp, the company ranked 20th among Chinese developers based on contracted sales last year. How the government reacts to these dozens of middle-sized developers will tell us a lot about how the housing crisis will ultimately unfold in the coming months. It's one thing to bail out a few too-big-to-fail players. It's another to bail out dozens of smaller but not inconsequential actors. Also, when the crisis was first sparked, Logan Group was seen as one of China's stronger developers. The market now recognizes that this was a mistake to believe. A concern for its financial health has grown this year, and like I said, this month is going to be a tough month for the developer. Logan Holdings is the main issuer of the parent group's domestic debt. In the same statement that we discussed above, the company said it was facing a liquidity crunch due to the, quote, external financing situation, declines in industry sales, and the concentration of debt maturity. End quote. According to data with the domestic debt information platform Dealing Matrix, Logan Holdings has 19 outstanding bonds with a total balance of 20.6 billion RMB, 12.4 billion RMB of which is due within the next 12 months, with 4.05 billion RMB, over $600 million of asset-based securities due in September or by September. Logan does not have direct access to capital markets, and its sales, like many other developers in the industry, has been smashed, so its liquidity issues are very acute. Since last month, Standard & Poor's, Fitch, and Moody's all downgraded Logan's ratings several times. In fact, we covered some of these downgrades last month. Analysts at Caixin Media write this week that negative news flows have hurt market confidence in Logan, which may affect its funding access. Some banks have demanded early repayment loans by Logan. For example, Ping An Bank and China Merchants Bank in Guangdong in the south of the country have made such demands. Caixin has also learned, according to its reports, that the company is seeking to extend 2 domestic bonds. Quote, Logan Holdings submitted an initial debt extension proposal to some bondholders Monday night. The company proposed to extend a 2 billion RMB bond due March 22nd by 18 months. The bond has a balance of 1.83 billion RMB with an interest rate of 4.9%. End quote. However, reports indicate that some investors have expressed dissatisfaction with the plan. Hey guys, I'd love to hear what you thought about some of the updates we covered in today's episode, so throw your comments below. Always love hearing from you. Thank you for watching. I'll see you next time.